to Lunch Money. Lunch Money is the online and social media home for special situations, workouts and capital raising professionals. And we are here at the Royal Exchange Club having breakfast and talking about heavy haulage, heavy challenges, financing the transport industry. I guess one of the reasons that we're doing this seminar today, we're kind of working our way through the industries. We did construction and mining a little bit early in the year, and we've got manufacturing and other industries coming up. But we certainly have our fair share of transport clients at Hermes. So I was saying to Catherine, I think yesterday or the day before, that all of our payments in one day seem to be transport. We've got transport clients all around the country, and they certainly face different challenges. There's challenges. One of the challenges that we found, and I don't know how many of you finance transport companies, but during COVID, you couldn't get hold of a new piece of gear. You couldn't get hold of a truck. You couldn't get hold of a trailer. These things were as rare as hen's teeth. And we all know how supply and demand works. The values went up, and now, some of these things you can barely give them away, particularly the older ones. So during COVID, you had a 15-year-old trailer. It was like gold. But now, because of the way the supply chains got messed up, on top of that, because there are a little bit of tension in the transport industry, your fuel suppliers and other suppliers to the industry are cracking down a little bit. And of course, we've had, the ATO, invading small business land, like the Visigoths invading the Roman Empire. They've just gone mad on small business. So we've got a fantastic panel that we've put together for you. We've got Ben Gibson to my left. Ben is head of advisory at Pickles, and you've sold one or two trucks in your time, Ben.
Yep.
And on the far left here, we've got Luke Andrews, who's a restructuring and insolvency partner at BDO, and I guess happily for all of us here, because he can share his experiences, but unhappily for some businesses, you've been involved into some fairly tricky transport industry insolvencies.
Some end up happy.
Some end up happy. They do. Not just for the lawyers.
Yeah, that's it.
And then we've got Roman Tepes from Balance My Books. So Roman is a business advisor and gets called in when companies get a little bit messy. Hopefully, sorry Luke, but hopefully he can sort them out so they don't need Luke so much. And he's got a couple of large transport companies on his books that he gives advice to and helps keep them in order. So I'm just going to go sort of up and down the panel and ask my first question, which is introduce yourself and tell us about your interest specifically in the road transport industry. So starting with you, Luke.
Yes, thanks very much, Nick. So I am, as sort of Nick's already mentioned, I'm a partner at BDO in the restructuring division. So we do focus on those turnarounds. Also, sometimes when there's a balance sheet issue, really that's the key of sort of when we're talking about restructuring. The key to it is that there is a balance sheet issue. Might have been from an underlying performance issue. Sometimes it's through shocks, but fundamentally that's what we're talking about. So I've been in the industry for about 20 years. It also spent some time at one of the big four banks in their turnaround workout division, which really sort of set me up in understanding how a financier looks at it, particularly around the sort of the majors. And in particular around the transport, I've had a number of assignments over the last sort of 12 months. It seems the industry's been a little bit more challenged from what I've been involved in. So yeah, and I think me and at the moment Ben are involved in one together, which is one of those ones that ended up not quite as happy, but Ben's helping out make it a little bit more palatable.
All right, Ben, so we're not getting too much into the nitty-gritty because we'll get to all of that, but just introduce yourself and your interest in the transport industry.
Yeah, so Ben Gibson, I'm a 30-year, makes me sound old, nearly has been around as long as you think. A career auctioneer and valuer. I head up the advisory division for Pickles. So Pickles are by far and away the largest auctioneers and valuers of equipment in the country. We sell around about $3 billion worth of equipment every year: motor vehicles, transport equipment, construction equipment, mining equipment, agricultural equipment. Probably in the transport sector, truck and machinery is probably one of our larger divisions. We sell around about 42,000 transport assets every year. So that gives an incredible amount of data. We've got a team of, well, our business, we have about 900 people around the country, but we have 30 full-time valuers. So we're on all the bank panels, all the financier panels, second tier, third tier financier panels. We produce those valuation reports. Then in the case of sometimes when they're going through a restructure and they can't be sold as a going concern or turned around, then I look after the sale of those assets. But the advisory division is only one part of Pickles. We've got a whole bunch of sales guys out there that sell equipment for transport companies and other machinery companies. We sell for the tolls, we sell for the Lim Foxes, all the major transport companies around the country. We have contracts with them to sell their surplus gear just in the normal course of their business. So as trucks and trailers get older and they need to replace their fleet, they give to us and we resell them into the secondary market.
I guess you're also doing balance sheet valuations, M&As, all sorts of.
Yeah, we are. So we probably can get into that a little bit more, but we've had to find ways which has kind of helped our relationship, Nick, hasn't it, in terms of ways that we've been able to leverage off our balance sheet and our knowledge and our data to provide some certainty for lenders or funders around tricky situations, and particularly in transport.
All right. Well, I'm pretty sure that probably 2/3 at least, probably everybody has had a Pickles valuation across their desk at some time. Might make them smile sometimes, sometimes they might get a little bit disappointed, but that's the nature of valuations. All right, Raymond, tell us a little bit about yourself and your interests in transport.
Yeah, so our company, Balance My Books, we get clients coming to us. Basically, they're in two positions. They're either saying, I really don't know what's going on in my business. I don't understand if it's profitable or not profitable. What's going on? Or they come to us and say, we've got a cash flow problem. Why do we have a cash flow problem? And more often than not, it's not a cash flow problem. It's a profit problem. And then we try to work out what's going on in their business to try to get them on the right course before we have to get people like Nick into the picture. But hopefully we can get people like Nicholas into the picture earlier into the piece and get ourselves out of the position. And we solve the solution by, typically speaking, their accounts teams usually not up to scratch.
There's no accountancy, so
yeah.
Is there any accountancy?
Well, we actually work with accountants. So typically, accountants provide compliance assistance. You know, are we paying tax? Aren't we paying tax? We don't deal with that at all. So we love accountants. We like working with them. Our job really is to get the bookkeeping function, the accounts payable, receivable, and payroll functions out of the hands of incompetent people, and to make sure that people that know what they're doing, are doing the right thing. And from that, it actually makes getting loans and all those other things much, much easier. So that's our function.
Okay, very good, very good. And you've got a couple of, you've got a
we do.
range of clients.
Range of clients in logistics and 3PL are definitely specialties of ours. And construction as well, I should say.
And they're not ringing you up because they're having a great time. They're ringing you up because they've maybe stubbed their toe. And
certainly. Typically, that's where it's at, and it's out of really not knowing what's going on. And I love the comment, I've got a cash flow problem. Well, do you?
Okay. All right. Well, I said before about asset prices sort of being a little bit disappointing on the downside, to say the least, this year. And then I know that one of the things that you always talk about whenever we talk about Pickles is the data set. You're really proud of that. You guys have got a massive data set. And so tell us, what the hell is going on with asset prices and transport?
Yeah, well, I think you, in your opening, Nick, you really summarised it quite well. at some stage, I guess we won't talk about COVID, but it's topical in that this asset prices were through the roof. You couldn't get quality assets, huge wait times for new equipment, and all of that kind of worked towards a couple of years ago during that COVID period of asset prices going through the roof. But what we've seen since then is a whole lot of those supply chains have normalised and supplies come back onto the market, is that asset prices, prime movers, rigid trucks, semi-trailers, have all trended down and actually quite sharply. Some of it's it's just normalising, going back to where it should have been pre-COVID levels. And up until probably 6 weeks ago, I was a little bit concerned about how quickly prices were dropping and some of the things that we've seen coming through. But our August clearance rates and our August numbers seem to have kind of stabilised a little bit. So it may well be that we've kind of got to the bottom of that. We're back now to the new normal. But what we are seeing in some of the distressed scenarios that we face is that people that have financed equipment sort of 2 or 3 years ago at the height of COVID have had to pay absolute top dollar, but even for second-hand equipment. And now they've found themselves in some trouble, and they're still owing a lot more on that equipment than what it's actually worth. And normally you'd expect, after 3 or 4 years that you're probably, you're starting to build some equity in the equipment, but because the prices have been trending down, it's quite often not the case. And if you multiply that, doesn't sound too bad, one truck or one trailer, but if you multiply that across a fleet of a couple of hundred units, it's a really significant downturn.
And I'll just say that we've got to project our voice because we don't have a professional photographer here just to make sure we capture everything on our microphone.
Yep.
I'm told that there's, US trucks are holding up better than European trucks, and maybe the refrigerator's not as good as some of the road freight. But just give us some insight.
Yeah. So and that's true. Kenworth, most of you'll know Kenworth prime mover. They remain really strong. There's kind of been a well publicised in relation to refrigeration equipment. Well publicised receivership of Scott's Refrigerated Transport, and that threw an enormous amount of refrigerated equipment onto the market, and we really saw that have an effect. Hopefully that'll stabilise now as we're starting to come into the warmer months. Hopefully demand will pick up on some of that stuff. European prime movers have been relatively soft. And as have some components of kind of the rigid trucks, Pantex and those kinds of things. So it's a bit of a mixed bag. And one of the key things that we always say, and in your dealings with transport clients, is really try to understand what their maintenance schedule is and what their reputation is around their gear, because it's absolutely key. We're going through a little bit of that with Luke at the moment, and it's okay if the equipment's relatively new, but if it's not being well maintained, you really feel it at that back end. It's time to.
One of the problems as a financier, if someone's having cash flow issues, then maybe they're not keeping up their maintenance schedules, and then the trucks are deteriorating in value. You say to the valuer, "What happened here? You valued it for X," and the thing hasn't been serviced in 3 years. And another, of course, the biggest nightmare, or one of the biggest nightmares, touch wood, I don't bring it on by talking about it, is there's 20 trucks, but 5 of them are in workshops.
Yeah.
And you can't get them out unless you pay the workshop person for the engine that's blown up that they've replaced and all that sort of stuff. Okay, so Luke, what from a restructuring perspective, when you're getting involved, I guess you get involved because banks get you involved, you get involved because directors get you involved.
Yeah.
I mean, what are the common issues? Now, I know people say cash flow, they say the ATO, but there's always an underlying issue.
Yeah,
they're just symptoms.
They're symptoms. Yeah. They're symptoms, not causes. Obviously, so there's always a range of issues. But if we're talking about leverage and how they got themselves into this situation, Generally, but some of the biggest traps I see is the types of equipment that they actually go for, and whether the underlying contracts and routes support and sustain that. So sometimes we end up seeing that they've bought the newest, most expensive schmickers gear, but ultimately it was for routes and contracts that are actually not making money. So you end up looking at it end up becoming an operational fleet management issue. So are they actually getting the right gear? And this is where you end up partnering with people like Pickles, and understanding what sort of equipment you can actually get and at what values. But fundamentally, it has to be the right equipment for the right routes to sustain it. So that's some of the traps I've seen, which ultimately, if you put this in a sort of property sense, it would be called overcapitalized. So that's a really common thing we've seen, and also floating with that is quite often an inability to collect debtors really well, and sort of end up showing that the evidence, because we've seen in so many circumstances there's debate and dispute between the customer and the client, which is normally our client. And so some of their processes and systems really need to be a lot better than what we're seeing. So they're probably some two key underlying issues that we see.
Nearly everyone that you would see too, Luke, because I know we talk about it or we've spoken about it, but the ATO piece is such a big thing.
Mm.
I mean, I know we said that that's a symptom, but it's rare that you see someone that doesn't have that ATO issue that's come out of COVID or whatever.
Yeah, exactly right. It's the unofficial bank.
Mm.
Yeah. So
our biggest competitors. Yeah. It's like, well, people always laugh, but it's a fact. I had a deal land on my desk yesterday, and let me see, they turn over maybe 60. ATO debt 7 mil. It's a fair chunk of change. So you were saying it's interesting with it when it comes to routes and the profitability of each truck almost. I know that finance brokers though when they're pitching a truck to want to get some finance. Sometimes I guess serviceability is always the thing, and sometimes there's so much serviceability you don't need to talk about it.
Yeah.
Sometimes it says this new truck will service because here's the contract it's going to attach to. But of course, we had our latest engagement with you, Luke, was a client, a transport company, and they were trying to change their accounting systems, and it was a train wreck. I don't think their customers didn't want to pay. Their customers just wanted to pay the right bill.
Yeah.
So it's certainly
it's a reconciliation issue.
Yeah.
And if you don't have those systems in place, you end up costing yourself a lot of time and money actually just trying to justify what you've done and explain it to your customers.
And I think some of those contracts have been difficult to, Nick, haven't they? I mean, that's a whole other issue as well when you're funding and you're financing. It's going to be based on the security or the tenure of your contracts, and getting some of those long-term contracts are really difficult.
Well. I mean, before I segue to Romans, I reckon he's probably championing a lot of the stuff that Luke's saying. But I know I've got a friend who is head of logistics for a very large FMG, fast-moving goods company, and he was tendering out the transport, and they're demanding 120 days trading terms. And so it makes it very hard. But Roman, you heard what Luke said there about accounting systems.
Absolutely.
And that's right in your bailiwick.
Yeah, it is. Big problem in logistics is in freight and logistics and 3PL. The software that they're using is, typically speaking, very, very clunky. It's either a very large ERP, or alternatively, they're trying to do things in a simplified version of Xero, but then they're using transport products like Transvirtual or whatever the case might be to do what they're doing, and the two don't communicate very, very well. And then they have a receivables issue that becomes a problem because they're not matching purchase orders with invoices, and then it becomes a dispute. And more often than not, trying to get the money ends up coming very late in the cycle when it's already been forgotten about. It's already a month ago.
Yeah.
So creating processes and systems where we try to recover the money quicker and not having a large receivable portfolio is usually the key. And then you know where your position is as well.
Well, I've always said one of the great things about receivables finance, or funding receivables are the entrails of the business. You know, when it's where all the problems show up.
Absolutely.
And I know, and I've got, Catherine, our general manager here, and probably Harry over there would sympathise as well. You know, where there's a debt that's gone in the 90 days, and we get involved and say, ring up the customer and, why haven't you paid? And they say, listen, I have called Frank, our client, 20 times and asked for that credit note or the POD or whatever it is, and it's not there, and I'm not going to pay until they sort it out.
Exactly.
So you see a fair bit of that?
Too much. And typically speaking, the issue is, again, in incompetent accounts team who are justifying their jobs by calling customers to try and fix things, where we like to automate the process. A lot of the time, we'll actually bring in software that'll automate things like reminder mechanisms. Your debt is due today, and really focusing on getting things not into an overdue state. Once it's in an overdue state, it's already too late. I love funding due money. I think that's a great way of making sure that you're keeping under control. But you should never be funding overdue money because that's costing you, and that's silly.
I hate a funding overdue money.
Yeah, correct.
The other thing is, yesterday we had a cup of coffee, and you were sort of maybe half jokingly lamenting QuickBooks and Xero and MYOB, and on one hand they supposedly make life easier, but they just help people get into a mess quicker.
Yeah, absolutely. They've simplified the program so much that anyone thinks they can drive it, which is absolutely right, you can. But to drive it well is very, very different. So having competent drivers behind those pieces of software is extremely important. So anyone can be a bookkeeper these days, frankly speaking, or accounts payable, accounts receivable person with those kind of systems in place. ERP is a different story. They're a little bit more complex, and the driver needs to be quite versed. But things like Xero in particular, it's counting for dummies. It's fabulous program, but it opens up to incompetencies creeping into your business.
Well, another issue that Luke and I encountered recently was there are some very schmick, online, in the cloud solutions, but then if the customer's only half implemented it, and they're still running the old system, and there's MyOp or whatever it is, and
so they've got this solution, and they're running two tracks.
And that's one of our clients. We had a big problem because they were saying, I'm profitable. And we're saying, well, how do you know you're profitable? Because when I run all my numbers in transversal, all my runs are saying that they're making money. And I said, okay. And then we compared what's in transversal to what's actually in their accounting package, and the two didn't meet. So it's like, well, actually, no, what you're paying is very different, and your revenue stream is not what your revenue stream is. So there's a gap, and all of a sudden, what they think is their profitability, because they're looking at it from an operations side of things, actually isn't. And that's sometimes timing, but more often than not, just purely the system not being up to scratch, up to date.
Yeah.
All right. Okay. Well, Ben, tell me, how do you at Pickles? We're pitching obviously with finance brokers. How do you engage with finance brokers? What are the scenarios that they're getting you involved in, and how are you able to sort of help them in capital raising scenarios?
Yeah, so a few things there. Normally the first instance that we're involved is obviously the valuation piece. And being on all the financiers panels means that if you're getting a valuation for us, you can then take that and use that for your funding. But we've also, for the last number of years, developed quite a few products, sort of credit enhancement type products. So we've got a number of our financiers we provide. We call them RVGs, but residual value guarantees. So we've got a whole. I'll give you an example. The Coles delivery truck that brings your online groceries to your store. A whole bunch of those. They've obviously been financed. and then we put a residual value guarantee in for that financier. So at the end of the facility, they can either take us up on that guarantee, or they can go and sell the truck, or do whatever they want with it. And then more recently, we've developed another product. It's called a guaranteed future value. This is some of the stuff, Nick, you and I have been working on, but essentially there's an ability over the life of a facility with a financier, and we'll underwrite, we'll guarantee the value of that fleet for the period. It obviously tracks down over time, but we'll guarantee a value on day one, and at any time through that period, if the financier was to call on that guarantee, we'll pay the money and take the equipment back. Really just kind of giving some more certainty, and we've seen quite a lot of changes in the industry. Certainly in that distressed or kind of non-traditional bank land over the last kind of 5 years, with a whole lot of alternative funders. Although you've been around, obviously, Nick, for longer than you were the trailblazer.
I don't look like I've been around a long time.
No. Yeah.
But
it's obviously, there has been a bit of a move away from the traditional banks for various reasons. And so we at Pickles had to come up with a solution where we could be part of that industry. And so the guarantees, because we've got this enormous amount of data, we're very confident in our ability to value equipment, transport, construction, any type of equipment. It was a way of us offering this credit enhancement service to our customers, which are again most of the financiers that operate in the country.
And Luke, a firm as big as BDO obviously has engagement with banks. And so do you have much involvement in pre-lending?
Yes. So we do get involved in sort of the pre-lending DD. And we also, I guess, have the expertise within a full service accounting firm. You end up being able to, when you've got specialty sectors, obviously we're talking about transport now, which I've been involved in. But when you have these really specialised segments, like, for example, mining, in a firm the size of BDO, you can really call upon someone who's an industry expert. It is a common service we provide. Yeah.
And is there a way that finance brokers can assist you in that process? If they've put a deal to the bank and the bank needs a pre-lend review, is there any way that a broker can engage with you to make your life easier?
Yeah, look, I mean, ultimately, the finance broker really assists with the understanding of the finance element to it, how the bank will look at it. So in that, we've actually partnered. What ultimately the pre-lend is looking to achieve is that confidence around what's going on in the business, outlining what it looks like, what the sort of forecasts look like, so then the financier can have something to hang their head on, and hang their hat on, rather. So yeah, in the end, it is a partnership that works well.
And Roman, I guess, would you ever find yourself, someone's given you their shoebox full of receipts and accounting, but they need to raise money for an extra 5 trucks or something, and maybe the finance broker saying, listen, we need a set of books that we can give to the...
Certainly. I mean, that's usually part and parcel of that conversation. And it wouldn't be as bad as a shoebox anymore these days, but most certainly I need to look in my emails to find those invoices. That's probably the equivalent of the shoebox these days. So, yeah, and it's just that sorting it out and trying to get some comfort. And most of it's sitting in the balance sheet, on the P&L, to be quite honest with you.
Right.
So, yeah.
I'm guessing that, people are picking up the phone to you because they've run out of money, probably. I mean, that's usually I find, and I guess certainly Luke would probably agree, if they got us involved 6 months earlier.
Absolutely.
But I guess it's when, unfortunately, it's human nature. That it's only when the bank balance gets really low.
Correct, and sometimes that's because their receivables have genuinely blown out, and there's issues there, and how they're collecting money. They're quick to pay but very slow to collect, and there are those kind of issues. And so sometimes they're a profitable business or a healthy business, but they just need support. They need some help, and the the owners funded the business up to a point that they can, and they've run out of money. But to be able to continue to fund the growth of the business. But but they're good problems to have. Right?
Yeah, I mean, I guess in our business, we get a client that needs an increase in limit, and the first question we always ask, because their ledger's growing, and the first question you ask, well, is it growing because of more sales, which is great,
correct.
Or is it growing because they've got the same level of sales but they're just not collecting, which is not so great. But yeah, I mean, growth. As you say, it's a timing issue.
Correct.
They're getting paid, even if they're getting paid on time, say 60 days. But their fuel suppliers, a lot of the fuel suppliers want to get paid this week.
Absolutely.
So talking about fuel suppliers, Luke, we just might get on to sort of stakeholder management. In the transport game, obviously, I guess your key stakeholders, aside from the owners of the business, there's the leasing companies that have financed the equipment. There might be, there's fuel companies.
Yeah.
There's the ATO. I mean, how do you go about managing all those people?
Yeah, it's a good question. And the reality is, obviously, all circumstances are different, but really, if I boil it down to a few key principles, really, in the end, you remember you're dealing with a human. So if I had to summarise from all my experience, what were the key sort of precepts and principles that actually make a successful sort of stakeholder engagement sort of strategy? I'd say the first one would be actually detailed analysis. What is the issue? What are the facts of the scenario? And with that, I think you end up saying, okay, well, we know what the facts are, but what's our story? Okay, so the second one is, what is our story? Because in the end, we're going to have to be telling people what's going on. Nick was sitting there saying, when I've got a request for an increase in limit, first thing I'm doing is ask questions. Again, what is the story? And you've got to have that clear. And then the last key plank, in a very simplified sense, would be ultimately transparency. So what are we going to do? And obviously there are levels and limits you have with different stakeholders, but that's the key principles, because really ultimately you're attempting to build trust. And if the story doesn't match up with facts, the analysis, then you're out of sync there, and you're not likely to be building that trust. But what keeps and maintains that trust is actually being honest and saying, look, I mean, we've got a story here. It might be we've lost a key customer, or actually our accounts right now aren't up to scratch, and we're going through a process or progress to actually improve that, so we can collect cash quicker. But really, they're the key fundamental principles. Again, I'd just say you've got to get your facts straight, which is all about analysis. You've got to understand what the story is and how you communicate that. And then you've got to keep transparency, because you need people to be patient. You need people to be forgiving sometimes. And that is, people are only going to do that when they sit there and look at you and say, okay, I trust what's going on here.
Do you ever have occasion to be speaking with the leasing companies in those scenarios? I guess you would.
Yeah, we do quite a lot. So one of the things that we've seen, kind of in that liquidation or administration scenario, and particularly this is really relevant kind of over the last 6 months. So if we take a step back 12, 18 months ago, if a liquidation came in with a fleet of vehicles, transport equipment or any type of equipment, to be honest, it was quite often that there was equity in the equipment. So the liquidator wouldn't disclaim it. We'd sell all of the fleet, be able to pay out all of the, and sometimes in these scenarios, as you guys, I'm sure, would well know, one company might have 6 or 7 different financiers involved that have financed different pieces of kit. But what we're seeing at the moment, because we've had that trending down in pricing, most of the stuff is underwater. So it makes it interesting for us. So when we get one of those kind of big liquidation sales, often we've got a liquidator who's kind of our primary client, but then we're also dealing with 3, 4, 6, 8, as many as 10 different financiers, all on the same fleet of equipment, and that's not unusual.
And what about, let's sort of flip it to the sunny side, because I know there's a couple of brokers in the room that I know specifically get involved in some, I guess, mergers and acquisitions or business acquisitions at the SME level. I mean, and obviously you get engaged to look at the asset piece there. How are you able to help brokers with their communications with the lenders? Because obviously the brokers want the deal to get done.
Yeah.
And how are you able to sort of assist in those, discussions?
Well, I think hopefully that most of that comes through our contacts, through our reputation. Nick, like I said, we're on their panel. We hope that most of them consider us a trusted partner rather than just a service provider. Because of this enormous amount of data, we go to great lengths, not only when we provide valuations, we give commentary around it. We've got market updates that we kind of put out every quarter. We've just had a recent one come out last week, which I don't think I've sent to you yet, but it covers off all kind of the major sectors, covers off transport, mining, ag, motor vehicles. So
who do you send that to?
We send it out to our clients. Yeah. So
if there's a finance broker in the room.
Absolutely. Yeah. Just contact me after this, and very happy to send it around. And just give you some colour. Some of the stuff that we've talked about, today, get you to understand that. And then because we're dealing with those financiers on a daily basis, hopefully we can put you in touch with the right person, or talk through what we're seeing. And I think just while we're on that kind of mergers and acquisition component, sometimes in those scenarios, particularly if it's a semi-distressed acquisition, that's where the asset-based lending piece is probably a really fit for purpose type scenario. So maybe they've lost some contracts, maybe they're going through some renegotiation. We're finding with a lot of our key clients that some of those contracts that used to just come through, supply contracts, just sign them and send them back straight away. They seem to be taking forever now. So we would not be alone, but there'd be a whole bunch of businesses out there that are kind of in this limbo. You're still working for your major contractor, but you're in negotiation and you're not actually haven't got a signed contract at the time. So I feel like we, hopefully with asset-based style lending, a little bit of that can be put to the side because, we're giving you some certainty around what the asset is worth in a worst case scenario. And perhaps there's an ability to less rely on, I haven't got, 6, 7, 8 long-term contracts there that are all signed and ready to go. Some of them are in negotiation, but I know I've got, a decent fleet of assets here that's got to be worth something.
Okay, and Roman, sort of just stepping back to the stakeholder management, communicating with maybe fuel suppliers, financiers. Have you got much experience in that? What sort of?
Look, most of the time they're relationships that we sort of stay back from, to be quite honest, because typically the stakeholders have those relationships in play, and moving those relationships is often quite difficult. Where we see an opportunity between clients, where we see a better deal elsewhere, then certainly we will broker introductions. But for the most part, those things are long-term deals, long-term relationships, and they're typically hard to shift.
Okay. All right. Well then, so what I'll say is, if anyone's got a question, just throw your hand up. Yes.
Both for Ben and Luke. In relation to your pricing on the guaranteed bite acquisition, I mean, AARE used to do that to me a lot back in the day in the mining industry and so forth. How do you price that? What does the customer cost? What's the cost to the customer? Do they have to pay up front fee, or do you take a clip at the end? And Luke, how much does your valuation cost? If I say a $20 million deal, you'll probably involve if it was a small deal to review it. So I just need to know your pricing.
Well, it's a good question, and that would depend on a lot of things. That sort of, in terms of me doing an actual valuation, that's sort of a different area of the business. I'm sort of more into the restructuring, but we do have that at BDO, obviously. But in terms of and pricing, generally, we'd have to sort of understand more with the business what's involved and the rest of it.
I'd say if you've got a specific scenario,
Yeah.
I'm sure that you'd be happy to give
Yeah,
you
absolutely.
I mean, Pickles, my experience, it's a few points. It depends on the deal.
Yeah, it depends on it. It's normally an ongoing fee for the depending on the length of the time for the guarantees in place. Yeah, so it'll be a percentage point, but again, it depends on the assets. Transport assets we love, so we think it's pretty competitive there. We do it. We love motor vehicles as well. So most of the guaranteed buybacks that are offered by it appears to be the OEMs. We actually sit behind a whole bunch of those. You take I won't give a brand, so I won't give away who our clients are, but you make a purchase of a new motor vehicle in 3 years, you've got a guaranteed buyback. There's a 6 in 10 chance that guaranteed buyback price that you're being given is provided actually by Pickles, not by the manufacturer. Yeah.
All right. Any other questions? Just throw up your hand. Yep.
Quick one for Roman. I hear I work in the SME space with clients typically turnover not greater than 5 mil, so it's at that sort of bottom end.
Yep.
What I find there is most lenders will now look at plug into the banking system and get the data that way.
Yes, it's starting to become very popular.
Yeah. But I hear exactly what you're saying about MYOB and Zero. They seem to have taken over the industry, and it doesn't really work for everyone. And I can see how it probably wouldn't work in the transport industry. I'm assuming you probably use a system that's not one of those for your typical accounting. And the question is, how is that then received by, say, the financiers?
No, typically we love Zero, so let's not walk away from that. We think Zero is an absolutely fabulous product.
Right. Okay.
So that's especially for SMEs, and that's our bread and butter for the most part.
Right.
So I would say 90% of our SMEs are on Zero.
Yeah.
With QuickBooks and not MYOB taking up the other space.
Yep.
So yeah, please don't misunderstand that. The problem is that people driving the product.
Right. Okay.
Not understanding it. Often in those kind of businesses, it'll be the wife or their brother that's a bookkeeper and does it somewhere else, and
no coaching, no training, no.
Correct.
Yeah.
Or they do have it, but it's it's like, yeah, I'm a plumber, but are you a good plumber, right? And they're the issues that we're finding.
Right. Okay.
And then the business doesn't get the insight that it needs. And then they get themselves into trouble because they're making decisions based on bad data.
Right. Yeah.
Garbage data in, garbage data out. And that's the issues that we often face.
So I think probably the underlying issue in what Robin's asking is that a lot of lenders, not us, but a lot of lenders are getting their data directly through these bank links.
Yes.
As a matter of fact, it's a lament of mine. I know, Robin, you've been around almost as long as I have. And we can actually read balance sheets. But a lot of these newer lenders, they just plug into the bank link. And I speak to the BDMs. I just don't know that they actually ever even look at a financial statement. So I guess the query there is just around the challenges of banks getting their data from the bank statement versus the financial statement.
Well, I don't think the bank statement's accurate at all, because I could have a ton of receipts or invoices, or I haven't billed out, or whatever the case might be. Yeah, absolutely. So that story, I'm a balance sheet kind of guy myself. I think that's where the truth lies. Yeah. So I think if there's a case to be presented by the bank statement, and then you can counter-argue that with an actual good set of accounts, I think the good set of accounts will always win. Yeah. So that's the challenge with SMEs. They don't have that in play.
Can I ask, I'm just curious, but this question could fall flat, but has anyone had a deal scuppered by a bank link? information, data from a bank link? No? Okay. There's not much of a question. All right.
Business-related loans, yes.
For business loans?
Yeah.
Yeah. Right. So what's happened there?
Oh, it's just when you look at the trading over the 12 months,
Yeah.
they're looking for specific things related to, lowest points, highest points.
Yeah.
To determine the cash flow.
But to Roman's point, sometimes the bank statement's not telling the actual story.
Well, I mean, if the bank statement shows at the end of the month they've got $2 in the account, well, that's really
That's telling the
accurate,
story.
right? So,
Yeah. But as Roman's saying is they could have racked up an extra, they could have doubled their sales and receivables. It just doesn't
Absolutely.
find
yeah,
the bank
exactly,
statement.
that's right.
Or it could be the opposite.
Absolutely.
Okay. All right. Well, look, before we sort of go to more questions, I just thought it might be good if we run down the panel and maybe talk about a success story. I might start with you, Luke. Just something where maybe you've got involved in and it looked like a train wreck, but it's ended happily.
Yeah. So it tends to be confidential. So it's on a no name.
We know that. Yeah.
On a no name basis.
And we are podcasting, so it is
Yeah.
whatever you say.
Yeah. Well, no. So there was. So it was an organisation really that they had a lot of trouble with their bank. There was sort of a fractured relationship there, and ultimately they had underlying contract issues, so they had to work through a process of actually getting out of contracts over a period of time. But they needed to do it under a specific program, and they had a lot of heat from their incumbent bank and effectively wanting them to ultimately refinance. Let's call it for what it was. But what I mean, and it's really the value of what we do is we have a lot of relationships and a lot of trust built up over many years with a lot of these financiers. They got us involved in that particular scenario, which actually ended up giving this organisation the breathing room and a program that was agreed by everyone, set up, and again it injected into that whole process the whole trust element, which the bank can sit back and say, all right, we trust people who are actually in there for us. So it's sort of like we're a bridge between these two people. Ultimately, they're still undergoing their program, but the bank has sat back and allowed them that time, allowed them that space. No more money, of course, which is often what happens in this situation. But fundamentally, if you break it down, really, with that whole process and their success throughout that came down to stakeholder management. Like they knew what their operational program needed to be, but if you don't have stakeholders on board with that, then it could all be for naught. So in that particular situation, it's still going, but it's in the back end of it now. So again, I mean, in these scenarios, I just can't stress how important stakeholder management is, because it really doesn't matter if you think you've got the best plan. If the people who matter aren't in the tent, aren't involved, aren't on board, then it can really not even matter.
Well, I guess if you're talking, in those scenarios, the person at the fuel company, the person at the bank, whoever it is you're dealing with, the ATO, they're not the sales end.
Yeah.
They're the end where they're dealing with this every day, and they've heard all the stories and all the rest of it. Ben, if you've got a scenario or a case where you can just tell us where maybe it's an M&A, maybe it's a turnaround where it's just been such a success, everyone's knocked it out of the park, and they're sending Pickles a case of champagne to help them celebrate.
Funnily enough, we've had a whole bunch of we call them retirement options. So in this industry specifically, as I'm sure most of you would know, they're often kind of family-run style businesses, particularly in that SME space. But for whatever reasons, there's no real genuine kind of succession plan, that the kids haven't gone into it or whatever. And then the old man sick of driving trucks and dealing with drivers. One of the key issues that we kind of haven't touched on a little bit, there's been a real problem, the shortage of drivers, and that's caused quite a lot of stress out in the industry. And what we actually found was, so through COVID, you had all these fleets and asset prices that went up quite a bit. There was a problem getting drivers, fuel prices were up, and then we had the corresponding interest rate rises, and quite a few, those kind of SME family-run businesses with no real succession plan actually put their hand up and said, you know what, my fleet's worth a small fortune. We've worked hard, we've paid it off, we don't owe too much on it. We're going to put on a retirement option, and I'm just going to get out of the industry. And it's a little bit like telling a story for us when we conduct and so we're selling fleet and equipment on a daily and a weekly basis. But when we get an event sale and we can kind of put a bit of colour or a bit of story around it, so Joe Blow's retiring, he's been in the industry for 30 years, he's maintained his fleet beautifully, and we put it all up as a package. We've had some really just enormous results over the last couple of years, and there's been quite a lot of those retirement type sales. And in those scenarios, one of the other things that we'll do is we'll offer a guarantee if we need to the client. So they're putting a lot on the line. Also, we'll guarantee a sale result of X for you, and then we'll share a bit of the overs or all those sorts of things. So there's a whole lot of things that we can do to make our client feel comfortable about the result that they're going to get at the end of the day.
And I would refer people to some earlier podcasts this year where we've talked about selling your business, and where because this happens in the transport industry a lot, where people that you think your business is worth a really high number, and so you hold out for that high number, and then you're getting older and older, and in the end, I guess they're coming to you and saying, "Listen, just take it off my hands." And I've seen that plenty of times, and I'm sure you have. And what about yourself, Roman? A success story where you parachuted in? And
look, I've had a couple of really heartfelt appreciation of people with literally tears in their eyes saying that you've helped me be able to sleep at night because I understand what's happening in my business now, and I didn't before. One's claimed I saved their marriage because the wife used to do the accounts. But from a logistics point of view, the big ones for us have been reducing accounts receivable for one company by 60%. That was a huge turnaround, and actually by automation as opposed to people calling and doing silly things like that, and increasing profitability as well. So we've had a client that was a smaller client, but they were running a six-figure loss. And we've turned them into a 10% profit scenario. So that was a huge turnaround for that business. So, absolute win on that one. So
Ben was talking about a lack of drivers, and we saw a client of ours. The business was sold, and I think part of the reason was it was during COVID, and the buyer wanted the trailers and wanted the drivers.
Yeah,
believe it or not.
Yeah.
But
didn't want any of the contracts necessarily.
No, they had work. Yeah. Do you sort of labour shortages, driver shortages?
Yeah, well, one of the funny ones, the first logistic company we brought on board, actually, they had a really aging fleet, and their maintenance costs were through the roof, and the drivers weren't looking after the vehicles. One of the things we encouraged them was to sell down their fleet and to sell their vehicles to their drivers to retain them. So they went from having employees to becoming their own bosses and having their own trucks, and subcontracting out their 3PL business more and more from a freight and last mile point of view. So that was a good turnaround for us. Actually, it's an easy win.
Well, I must say, from Hermes' perspective, can't remember who I was talking to earlier, but a success story for us, and we've had plenty of them, is where we've got involved when it might be dire straits. Maybe someone like Luke's been involved, or maybe not, and no one's wanted to go near the business, but there's been some assets there. You can see that with the help of someone like yourself, the AR can be cleaned up, because whilst we we love a big AR. We want it to be a big, good AR, not, we don't like, if half of it's in 90 plus, it makes it a bit problematic. And,
consistent sometimes.
well, don't go there. Yeah, don't go there. But so they've got themselves into a bit of strife, as I say, and and no one else will help them. We've been able to support them, and then after a year or two, the best thing that can happen, whilst we want to keep our clients forever, of course, the best thing that happens is we find out we're being refinanced by a major bank. And I always say that's a big win for us, that we've been part of that journey where, it started off as an asset-based scenario because that's all they could get, and they've gone that journey and they've tidied themselves up. And I always say it's with a team. It's not Hermes, but there's usually one or two really good advisors that we're partnering up. And I always say one of the things that Hermes can bring to the table is, apart from a sack of money, is that I guess one of the reasons we do these things is to show that we are well connected and we can help bring the right partners to the table to solve the different pieces of the problem, because it's not always money. I mean, money's just where all the problems wash up. As Luke was saying before, there's symptoms and there's causes, and money can solve the symptoms, but you've still got to solve the underlying problems. So look, I will maybe just throw to the floor one more time. What I'll say is, the best question, and I'll get you to judge the best question. We'll get $100 towards lunch. $100 towards lunch at the Royal Exchange. We'll give you a voucher for $100. So has anybody got another question that? David.
One for Ben.
All right.
Electric vehicles are all the vogue. I've got a client of mine who's gone into a 3 to 5 ton Panatex on alleged contract. What's the position on?
Yeah,
that is a great question.
Yeah, it is, and quite topical for me. I've just had a liquidation actually on Perth based in the west, and part of the fleet that we sold, there was 4 electric trucks, very, very low hour electric trucks. So we have, and they're not the first that we've had, but we've not seen a huge amount of electric trucks come through. So I'll say there's a couple of things on there. Is the technology is definitely getting better, and the cost is coming down. Even 6 months ago, they were significantly, probably double the cost of the same equivalent of an ICE, internal combustion engine vehicle. It's still got a way to go for sure. And as has happened kind of in the electric motor vehicle sector, there's not been the adoption at the rates that everybody thought that there was going to be. So we've only had a small amount, so I haven't got a really huge sample size to talk about in terms of what their resale value is. But I'd say I feel like there's more of a transition towards hybrids. Hybrids is kind of going to really be where the industry is going to be for quite some time until the technology kind of improves.
I guess it's interesting that to hear that the prices come off 50% is great if you're a buyer, but pretty bad if you're a financier, I suppose. Are many people funding electric trucks or electric vehicles, hybrids? No? Okay, yeah. David is. All right, well, that's a pretty good question. Can anybody top that?
One of the things we're discussing is when there's obviously issues, turnarounds, problems, etc. Is there any way we could use your services for business that actually is doing okay but would like to improve, or needs to make a decision in one of these areas that, for example, how do they set their accounting up, or what assets do we buy if we want to ensure the best longevity and value for assets long term? Is there any way we could use your services?
All right, so we're running down on time, but just briefly, where just engagement, not for a distress scenario, a growth scenario.
Yeah, the principles are the same, right? So it comes down to profitability. Normally that's where sort of some of their issues have arisen. We did sort of operational turnarounds all the time. I think Roman would have been involved in plenty of that too.
Yeah.
So, and Ben,
so most we majority of our business, actually, Pickles business, is working for companies that are going very well, particularly in industries like transport and others where there's a heavy reliance on equipment. The best businesses are the ones that are continually turning over their older fleet and reinvigorating their fleet. It's one of the things that we kind of didn't touch on before, but it can be a little bit of a trait with some of those older family-run businesses where I'm never going to sell that, bulldozer because that's the one that I did my very first job on and that sort of stuff. So we're engaged with, mid-sized businesses and large businesses that are continually turning over their fleet. And the other thing I'd encourage, particularly because there's been such a change in the market over the last kind of couple of years in terms of value and resale value, is encouraging any of your clients to get up to date valuations and do that on a semi-regular basis. Sorry.
Be like the dentist. My dentist wants me to get checked up every year. You want to do the valuations?
Well, I think, sometimes, particularly in transport, most operators are fairly keyed into the market. Like they've got an idea of what their equipment's worth, but it's probably a little bit like
a lot of us don't.
Well, and a lot of them are like most of us are probably with our own homes.
Yeah.
Everybody thinks your equipment or your home is probably worth, more than perhaps it really might be. So if you're not keeping up to date with those trends, you think you've got a big asset base here, but maybe it's not as big given what's happened over the last little while as what you thought, or you might be pleasantly surprised. You might be reading doom and gloom, a bit in the industry, and then we come along and do a valuation for you, and you go, wow, actually, I've got a whole bunch of equity in here that I could possibly use. Or
you said there's a bit of sunshine coming through after a bit of rust up.
Yeah, there is.
Roman, just briefly.
Yeah, every operator's got problems. So every business owner's going to say that they've got issues in their business. So being in a position, though, where you're not bleeding and you're doing okay, you can focus on things that are important in your business. So the earlier you get into that piece, the better, especially when it comes to systems and processes, because if you've decided to build a 15-story building, so to speak, you want to make sure the foundation's right. And then you scale to that 15 stories. You can't then all of a sudden decide that you're going to, build another 15 stories on top of that. So the earlier you get into the conversation, the better. And that's really when we come in and can do most of our work. That's good. Otherwise, inevitably, it comes to, we end up having to speak to someone like Luke and say, hey, how do we break it now so we can fix it again?
All right. Well, we're going to wrap up the podcast. So I think, David, that was a cracker of a question.
Rip up. It was so good.
It's funny, as soon as you mentioned maybe a bit of a grog voucher there, David.
Did you tell him that he's got to take us? So we're included in that.
Don't stress. Sorry. So what I would like to say is, if you're listening to this podcast, or for anybody in the room here, I'd encourage you to go through our archive. We've had some great podcasts this year on getting a business ready to sell. We haven't talked about that, but we've covered that. You talk about systems. It's important, when someone wants to sell their business to make sure it's dressed up the right way. And I'm sure everybody in the family could assist with that. And, we've looked at restructuring and a bunch of stuff. So have a scroll through the Lunch Money podcast, and I'm sure you'll find some more benefit there. So I'm going to wrap it up by saying thank you to everybody for coming here today. Thank you to anyone who's listening to the podcast or watching our clips. And thank you very much to our panel. Thank you, everybody.
Thanks, Steve.